stocks firming up here since the show started. S&P's maybe going to make another push back to that high. Kevin Green joins us for a look at the odds end of the bell. What's it looking like, KG?
Well, we've kind of stalled out here a little bit, Oliver. We are hinging to the upside, trying to kind of get back to that 56.40-ish level, if you will. But it is a little bit difficult. But we do have a little bit of momentum actually going into the close. A lot of call buying taking place and not a lot of put buying taking place here. Now, there is some pen risk if you're looking at that volume chart where we have a scenario where we could actually have pen risk sitting at around 56.23, which is pretty much where we're trading at right now. That would make the dealers, for the most part, net even on the day when it comes to gamma exposure. But it is a Friday. We have seen melt-ups in the past, and there's something that we could ramp up. But we're going to need a little bit more energy in order to do so, and that's going to really have to come from the mega cap names to really try to push us higher here.
That's kind of where the string has kept us off. NVIDIA, that's kind of been the catch here. Red, but it's trying to maybe flip, possibly. It was kind of dabbling positive. So maybe if NVIDIA wakes up here into the bell, we could have a hero to the close. But at least we didn't break down. So we're in that balance area. This seems like a big win today, especially without major leadership from tech. To make this day 3 of the rally without tech leading, pretty nice little cherry on top.
Yeah, we still have some time to the close, right? We could have a scenario where we do have these call buyers actually starting to sell their positions, and then dealers start to unwind those
if that doesn't happen.
Future contracts. But if that does not happen, yes, of course, this is going to be a win on the session here, up another 0.5% on the day. This is exactly what you want to do going into the weekend. Now, if you're looking at a longer time frame chart, Oliver, especially for the E-mini S&P futures, if you draw a line from the highs that we had, the all-time highs, and then that secondary high, we literally pretty much top tick that today. That's where we actually fell back, that 56.36 level if you are having the equivalent of the on the SPX. So we're right there, and we're trying to make as much a ground as possible here, and it does look like it's actually very strong when you're looking at the breadth of the market here today. If you're a bull, there has been some activity pretty much all day at the 56.50 area. When we started the day with a lot of call selling, institutions were really getting into the market, but now you have a scenario where you have some speculators actually buying and trying to push it higher. We did, and you can see it on this chart, we did actually fail that 20-period moving average on the 15-minute chart, Oliver. That we haven't done that pretty much since Wednesday. So that is actually a little bit different than what we saw from yesterday, where we were just continuing to cruise higher, bouncing off of it. Now we're going to really see if we are going to flip support into resistance, and if we do fail and go lower. And once again, if we're going lower in today's session, you had that pen risk that I kind of talked about earlier, and then you also have obviously that negative gamma area, which is going to be 5,600.
Okay, so this momentum we've got here, it seems like we've kind of got, look, it's like kind of that old high level. We are so close to records here where it's like we're at a point where if a few things aligned, the right market maker gets squeezed, pinched a little bit, we could be making records.
We could be, and we're going to need to actually have some of the economic data next week to support that. I think that's going to be the big catalyst here. What we fear is another scenario like we saw in October of last year, where we had moved to the upside, and then we failed, and then we kind of really touched those highs again, and then that's where we fell off. And I think that's where a lot of bears are really kind of waiting for that setup. So I'm not discounting the fact that we had a nice little run here to the upside, but I think we're going to need to have something definitive, more than just the price action alone, in order to get us there, something that's going to be very positive for the market, strong retail sales, or let's say moderate retail sales, an FOMC meeting that does provide the cuts that the market wants, and plus also dovish commentary would be another catalyst for us to be able to move for. And once again, you're at a rock and a hard place. If you're trying to start a new position, it makes it very difficult if you're a swing trader, basically, right? Because you are hitting an area of resistance, or really approaching an area of resistance. What you want to do is see that break to the upside and then catch that gap to the upside in order to ride that momentum. I'm not saying that we can't, but I am a little bit surprised that we haven't seen any type of meaningful pullback after hitting those lows of 5,400.
Okay, so we haven't even really tested any of the downside areas, right? I think this went a lot smoother than I thought it was going to go today, up here in the mid 56, and no tests ever since Wednesday. That was it. I guess when we couldn't break down, and we went from low multi-day low to multi-day high on Wednesday. I mean, it is kind of what we hit here. Like, that was such an impressive move. I feel like it just got us on course for momentum that's been hard to turn around.
Yeah, I agree with you. And once again, when we kind of talk about that day, the amount of buying activity hitting the asking prices, it was like 95% of that volume.
So I mean,
that's a key area. You have breadth kind of widening out. That's also very notable as well. You're not also seeing defensive selling off. They're all moving together in tandem. So there's a lot of bull things for the market right now. But we are, once again, 56.40. It's like 56.43 and some change, Oliver, where the SPX is going to be testing that neckline on that double top to be able to break through. So we're pretty much right there. If we can go back to that volume chart for today, just one thing to kind of highlight, we did actually make an intraday low after kind of that nice run up to the upside. So that, once again, we kind of cracked that trend and we have to be mindful of that. I have it kind of angled out there where we had that upside and then we kind of did make a little bit of a low. So that is something to be mindful of if you're kind of looking into the close. It doesn't seem like dealers are trying to give us any type of play as far as trying to rip to the upside. But once again, even if you close it around these levels, I think that's going to be a win. You want to stay away from around 56.08 is actually going to be the key area where you don't really want to go below, because then we're probably going to pin at 5600.
All right. Good stuff. Nice, particularly on Wednesday, ID and all the extreme kind of bias that was in there. All those trades that were going off, very much on the side of the bulls, and the shift, the skew that pretty much got us some nitrous into the weekend here. Thanks, KG. All right, 56.22 S&Ps.